Hey everybody, and welcome back to the Teaching Tax Flow Podcast, episode 195. As promised, we are diving back into the IRS, that Internal Revenue Service Data Book. This year, it's for fiscal year 2025. And of course, there's more stuff packed in this thing than we could ever put in one single episode. So we're breaking it into two. The first section here, we are going to look at our top, won't tell you how many, I'll let my co-host tell you that, administrative observations. So if that doesn't perk your ears, you will definitely take something from this one. And by the way, Chris, I think they've been doing this data book for almost 20 years. I think it was 2007 when the IRS first started putting this out. I could be wrong, but this thing is jam-packed with information. It's public information. So as always, man, let's dive into this one. I'm always excited. I love these.
Well, we talk about that. One of the three laws of teaching tax flow is that tax agencies are your involuntary business partner. So to understand your involuntary business partner, the IRS issues an annual report every year in the summer based on their fiscal year. So their fiscal year starts on October 1st and goes to September 30th. So this is a report that runs through their fiscal year of September 30th, 2025. And like you said, we don't necessarily look at the IRS as our enemy. They're not our ally. And they detailed a lot in our Defeating Taxes book. They're our involuntary business partner. Now, many listeners and subscribers do consider the IRS maybe their enemy or Darth Vader or whatever we want to call it. Regardless, they are the ones that administer our tax code. So by not diving in to the public report that they send out, we'd be foolish. Now, I don't expect people are going to spend 30, 35 hours in this data book. That's why we're going to do this podcast. Last year, we did one episode on it. Now we're going to do two episodes. We're going to talk about our top 7 administrative observations from the data book, really looking at the returns filed, taxes collected, and refunds issued. The next episode we do here is we're going to talk about compliance and enforcement. So they go hand in hand. And we put together the top 7 observations. So why don't we dive in? Because again, anyone that's played sports, can you imagine being a football team and already having the playbook for the other team? So this is like scouting, right? This is your advanced scouting. Or can you imagine going to a job interview? Wouldn't it be nice to know all the people that are interviewing you, who will be there, and what questions are going to ask you before you even walked in the door? And that's what we have in front of us. So we're happy to give that to the Teaching Tax Flow community, and I'm ready to dive in.
Yeah. And with this too, Chris, so we're looking at the data book, not the publication, or the pub is sometimes it's called, right? Data book, we're looking at basically their metrics, they're reporting on activities, where the publication is I think it's like 7,000 pages. It's incredibly huge. And that's the rules, regs, laws, whatever you want to call them within there, right? The guardrails.
Right. There are tons of publications in the IRS code. We are looking at, think about this as this is the IRS's annual report. If they were a publicly traded corporation, they would have an annual report that the talking heads in the investment world look at and analyze. The IRS is not. Well, some might consider it a nonprofit. Some of them might be losing money, gaining money, but regardless, this is their annual report that they're obligated to give us. And so let's jump in. Let's dive under the hood here on these administrative observations. And you're right. This is separate. This is a report about their operations from the last fiscal year. Now, many people wonder why our estimated payments are due at certain times, and a lot of that's driven by the federal fiscal calendar. So let's jump in. So the first observation is that the IRS collected more money, but refunds grew faster. Now, we've had a lot of content in Teaching Tax Flow with the One Big Beautiful Bill Act. We anticipated refunds would be larger this year because of these new temporary tax deductions. Again, a lot of these refunds occurred in 2025, so really weren't affected too much by the One Big Beautiful Bill Act. However, with the higher standard deduction, maybe there are more refunds. But the IRS collected $5.134 trillion of gross tax.
With the T.
That was up from 5.1 the previous year. So that's a $2.13 billion increase in tax. Now, That's funny, right? Because we know right now that we are in the lowest tax rate era ever. However, the IRS collected more tax. That seems weird. Why would that be? My observation is this. There are a lot of people out there that understand we are, and I think you quoted me on this, that I said it was the golden era tax at some point. Like, we are in a very low marginal tax rate environment. So for people that have assets in pre-tax accounts, they're realizing maybe I should pay tax on this now, lock in the tax at today's rates, and that's what's happening in my opinion. So refunds did rise. Also, this is crazy. Refunds rose from 553 billion to 639 billion. So refunds are higher, but taxes collected are higher. Very interesting. Um, a lot of movement. Absolutely. The second observation, the IRS processed 271.5 million tax returns in 2025. 271 million. That was up from 266 million. So almost 5 million more tax returns were processed, which is really interesting. Now, does that mean that people are creating more entities? Does that mean we have more taxpayers? Um, obviously, the more tax was collected. Um, who knows? It's just interesting that we have more filings. Does that mean that um, the more people are, or maybe our country is getting older and they're having to take required minimum distributions? But anyway, that's a decent amount more um, tax returns to be processed, and the IRS isn't necessarily growing their work pool either. So more work for probably the same amount, if not less amount of
And
employees.
that's almost exactly what I was gonna say. It's right. I mean, I hate to say, "Hey, let's give them a little bit of grace here as
Mhm.
an operation," right? But imagine if e-filing wasn't around yet. Like, they're literally
Right.
sliding papers through doing these. I mean, obviously, technology now is kind of king in that world, but, that explains a little bit why the average taxpayer can't just pick up the phone and somebody answer in 3 rings from the
Mhm.
IRS with a question, right? So, and why I say that is adding a little color to this is I think now leaning on a tax professional more than ever is really the liaison, if you will, to
Mhm.
getting things done correctly, right?
Right, and you nailed which segues into number 3, but the IRS wants you to electronically file. So for the fiscal year 2025, which went through September 30th of 2025, more than 224 million returns and documents were electronically filed. So that represents almost 83% of returns being electronically filed. That is an exorbitant amount.
This episode is sponsored by Wealth Builders Mortgage Group, powered by Movement Mortgage, one of the top mortgage teams in the nation and a powerhouse in the real estate investing world. With over $1.1 billion in closed mortgage volume and more than 3,000 investor deals under their belt, they don't just talk the talk, they walk it. Their team specializes in helping short-term and long-term rental investors scale smart with customized lending strategies. They offer all STR loan products, including second home, investment, non-QM, bank statement, asset-based, and HELOCs. They also offer all primary home loan products too. Whether you're just starting out or expanding an existing portfolio, their unique Path of 10 strategy is designed to help you move from a 9-to-5 job to financial independence. If you're looking for a lending partner who truly understands the investor mindset, visit wealthbuildersmortgagegroup.com and start building your roadmap today.
And that's across the board, right? When we talk about individual tax returns, so those are the 1040s, the e-file rate was even higher. 93.7 returns were electronically filed, up from 93.3 in the previous year. So almost 19 out of every 20 returns, individual returns, are electronically filed. Now, once in a great while, there might be a form or something we're not allowed to electronically file. There might be reasons to not electronically file, but in general, electronically filing, if you're getting a refund, it expedites it. It's much more secure instead of mailing documents around with your social security number and sensitive financial information.
The Postal Service definitely takes a hit these days, but they'll find other ways.
Well, that's interesting, right? Think about the volume, in many ways. I feel like we still get junk mail,
Right.
but newspaper decline. I mean, this is an indication of the IRS. So the IRS was going to say they're going to give themselves a high five for that. That's a statistic. That's a win, and I think it's a win for everybody. I think electronically filing is the right way to go, and we have lots of clients. I mean, in our private CPA practice, we electronically file all the returns that we can. And then sometimes you actually can include an attachment. Sometimes IRS says, hey, let's say they donated a non-cash item that we have to attach something verifying that the donation is legitimate. So now we can attach documents to the filing. So that's pretty good.
I actually never knew that. I never knew
Mhm.
you could do that. It would make sense, right? Because if not, you're just taking somebody's word for it. And then if they dispute it or some form, you can't say, oh, well, you didn't let me send you anything. So tough.
Right.
Now my dog ate it or something. Makes sense.
So the next number 4 observation. This is kind of crazy. Fewer people received individual refunds, but the average refund was larger. So the IRS issued about 117 million individual tax refunds last year, up down from about 117.5 million. So even though the amount of people getting a refund was less, the gross amount of dollars refunded was much higher. So $491 billion was refunded to individual taxpayers the previous year. It was $516 billion this year. So that means the average refund increased from $4,171 to $4,417. That's a pretty significant increase. I mean, that's
Right.
almost a 10% increase in average taxpayer refund.
And you think too, like even that, you're roughly, $300, right? Under $300 in difference. It might not sound like a lot, but again, that's the average over that many million of them. Like not that many million refunds, but that many, returns processed. That's
Right.
huge. That is massive.
And
It's not just
so
a couple bucks.
I anticipate this amount is higher next year. Why? Because of that new Schedule 1A. We do have a full episode on that. We have content on the Teaching Tax Flow YouTube channel about those 4 new temporary deductions: the no tax on tips, no tax on overtime, senior deduction, and new vehicle interest deduction. Those are going, I feel we're going to have larger refunds and more refunds a year from right now when we record this. God willing, we record this episode for the 2026 Data Book. I was shocked by that number because John, when you're talking about billion or millions of people, to go up almost 8-9% of the refund total is a lot.
That's huge.
And I didn't think the average refund was that high. I didn't think it was almost $5,000.
If I had to guess, I would have said almost maybe sub 2,000.
Right.
To be honest.
So number 5 out of the 7, business income tax collections dropped sharply. So business income tax collections were $565 billion for the fiscal year 24, down to $486 billion. That's almost an $80 billion decrease in business income tax collections. Now, does that mean that less people are C corporations and we have more flow through entities like partnerships, sole proprietors, or S corps? It's just interesting, right? It means that with the One Big Beautiful Bill Act and the Tax Cuts and Jobs Act, and remember at this point too, the data collected here comes from the fiscal year ended September 30th, 2025. The vast majority of that year was before the One Big Beautiful Bill Act came into play. So the majority of that year, taxpayers were thinking that the Tax Cuts and Jobs Act was going to phase out and that taxes were going to go up. So a lot of people might have rearranged their tax situation and then in anticipation of the tax hike, and it really didn't go up. So,
and really with that one, Chris, here's a broad statement, right? I'm not going to say like, hey, we've impacted this number drastically, but maybe a little tiny bit, couple cents or so. But really, I mean, would you almost make the assumption too that now maybe more than ever that people may be more, I hate to say it, but like interested in taxes as a whole, and that they can do stuff, strategy planning, all these things versus years past,
Yeah, I
thus
think that a
decreasing?
lot of, I mean, we're hoping, right? We're building
Mhm.
this whole media platform to help people educate themselves. And there's definitely an interest in understanding that you can control your tax situation. I think that there's more flexibility. Like we have more gig economists, we have more solopreneurs now. The path isn't as, I mean, we're a little jaded in a way because we grew up in the Detroit area where the path was, okay, well, I'm going to try to get a job at the big three and I'm going to lock in for 30 plus years, or I'm going to be, you know, get into a trade union and I'm just going to plug and play for 30 years into this more gig economy out there now. So, well, I've got two more to wrap things up. This is really interesting also. Individual income tax collections was overall higher. So even though we're in a lower marginal tax rate, individual state and trust income tax collections went from $2.73 trillion to over 3 trillion. That's almost a $250 billion increase. That's
That's a
crazy.
lot. That's a lot, man.
So more money is getting paid by individuals, less by businesses. Like I said, it might be from the flow through. But again, this might have been like when we were advising our clients and doing tax planning, we didn't know the one big beautiful bill was going to exist. We had to assume the Tax Cuts and Jobs Act was going to go bye-bye, and we were going to get hit with much higher taxes in the next 4 to 5 years. So a lot of people were, like I said, accelerating income into a lower tax year. So that someone's overall marginal tax rate still might be smaller, but they just paid, more tax. So definitely more collections coming from individuals than businesses. We're looking forward to diving in next episode to see where's the IRS enforcement going, right? Last one, number 7. This is pretty crazy, and I don't think this is going to be a big surprise to anyone. Excise tax collections jumped significantly. So $78 billion of excise tax was collected in fiscal year 24. That went up to 91 billion. That's a 16% increase in 1 year. And excise taxes don't get as much attention as individual income tax. They're one of those hidden taxes. But this was the biggest percentage increase for the IRS in every tax out there.
Mhm.
So the
I'm glad you
question
brought
is,
that up, the hidden ones, right? Because there's a lot of them, but you're right. They're the ones that I, I'll use the word just assumed, right? Like people just assume that, like, oh, yep, it's just part of everyday life, which
right.
it is. You can control it a little bit, but it is.
Well, so to wrap it up, that's 7 observations. People might be saying, well, you guys just talk about excise tax as a hidden tax. I'm going to leave you with the 7 most common excise taxes they are gasoline and diesel fuel tax. John, you're happy to be not paying that diesel fuel tax anymore. That's when
Our
you
whole
roll up to the
house.
gas station and you see, why is diesel so much more than unleaded? Boom. Airline ticket taxes, right? Just like now with the airlines, oh, my flight's going to be $200. Well, wait, it's $275 now. If someone's got to pay for these airports. Alcohol taxes, tobacco taxes. Luckily, we don't fall into that one, right?
Right.
Heavy truck and highway vehicle taxes. So that's going to be for those long haul truckers. John, I don't see you with this one. Indoor tanning services. Now I've got a nice little tan going right now. It's funny when I look at the podcast, I can tell what season of the year it is because am I out playing more pickleball or not? But so I don't need to go to the indoor tanning service here in Nashville. And then wagering taxes. We know that there's a lot more legalization of sports gambling, but there is an excise tax on that. So those are the 7 most common excise taxes. And wow, a lot to digest. We'd love to hear your feedback about this data book. John's going to put a link to the data book in the podcast episode as well.
Absolutely. And Chris, to close this one out a little bit differently, I don't think I've ever wrapped up a topic we've touched on when I think like, wow, I must be a pretty boring individual. But although it's a good thing, I don't get hit with any of those excise taxes. Don't smoke, don't drink much, don't go tanning inside, don't drive, don't fill up at the pumps anymore, don't do any of those things. So I feel more accomplished than usual.
So that's
But
tax efficient.
yeah,
That
man,
is tax
tax
efficient.
planning, right? Very, very ahead of that. And I mean, these numbers to me, right? Looking at them, this was my first time really peeking at them, Chris, as you're running through them. We're both looking at these things as we're jumping through them. it is very significant. Like, again, those numbers might seem small in, hindsight if you're looking back, but I remember those average numbers are huge. There's a lot of growth there. And Chris, like you mentioned, I think next episode, we're going to dive into the compliance and enforcement side, which that's kind of where I geek out a little bit more. So I'd love to see that. And again, everybody check that one out. Again, if you're watching this, listening to this, wherever you are, comment on it and let us know what you think about these. And heck, I mean, if you guys want to banter back and forth a little bit too about, how many, excise taxes you can avoid, maybe it's a little challenge and we can come back on those. So check it out. Subscribe to the show. We'll see everybody back here again next week on the Teaching Tax Flow podcast. Have a great week, everybody.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC registered investment advisor. Chris Picciuro is a registered representative of Cabin Securities and an investment advisor representative with Cabin Advisors LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabin Securities or Cabin Advisors.